Christian, how you doing this morning?
Oh, I tell you what, I don't know about you and all your listeners, but pretty ready for this day to be over.
So it's funny that you mentioned that because I'm Central Time here. It's 7:30 in the morning, and I too am kind of ready for the day to be over. Did you vote already? Did you get out there and vote?
No, I'm doing that this afternoon. I'm kind of fortunate where one of the fortunate, my kids are home today because the elementary where we vote is right behind our house. So I get to walk right across the street basically. And, you know, but I got the kids home all day. But yeah, so I'm going to be doing that today. And really, I love voting and I love, the whole thing, but it's after a while, you're just ready for it to be ready for it to be done so we can get moving forward.
Absolutely. I'll tell you what, it's the lead up to this that really gets me. I'm just trying to watch sports. I'm just trying to watch something on TV. Stop bombarding me.
Doesn't anybody care?
I walked over to my local polling place and got it done earlier today. So, all right. So given the election, given everything that's going on here, what are you watching this week? What's going on here with the markets?
Well, I tell you, probably first and foremost is the overall market, right? And you're kind of like me. You deal with and you work with a lot of students, a lot of members, a lot of attendees, and the election is the obvious question. Of course, we have FOMC on Thursday as well. So there's always those.
Let me stop you there. Do you have any expectations for that? What do you think is going to happen?
Well, I always joke with my the members of my calls and stuff like that. Is I kind of already know what's going to happen, whatever the market said. So one of the things I always like to do, and I started marking it like 3 years ago, because I've been coaching for like 17 years, and there'd always be this big run up to the FOMC, and I'm like, well, if everybody looks, a lot of times the market kind of tells you what it's planning on doing. In other words, 90+% of the time, if the market was going higher, all it does on FOMC day is go higher. If it was going lower, if it broke a key level of support, and so 3 years ago, I just started marking them so everybody could see. I was like, I want you to see for yourself if the market is telling you something. Sometimes it's not, right? Sometimes we go into it. I'm like, you know what? I don't know. Could be a higher or lower. But a couple months back, the market the day before had broken resistance. I said, FOMC, FOMC, the market said it plans on going higher. So as long as that is there, so we'll see what we're looking at come Wednesday close, Thursday morning. But I would expect if we look at, let's say, the last four elections that were not bear market associated, if we look at FOMCs, if we look at what's been going, if we look at overall trend right now, unless the market tells me something otherwise, I'd be expecting higher. Okay. However, there were some breakdowns last week. Now, me being a CMT and a technical analyst, a chart nerd, I'm looking at levels that have broken. I'm looking at patterns like the rising wedge a lot of people are showing on X and such. A lot of these breakdowns make me wonder if there's a short-term move, like say, for example, back in 2012 after the election, there was a short-term move lower. But I would think overall, seasonally, this is a great time of year, especially an election year. I would expect ultimately this week resolves itself to the upside.
Okay, so I'm with you there, and honestly, the buy the dippers have really been strong all year. Pretty much all sell-offs have been met with the buyers, so I'm with you there. Now, you had mentioned the area that we're at here on the chart. Looking at the SPY here, we're sitting pretty much right at the 50-day. We've actually had two recent tests of this 50-day. We've not broken beneath it. You had mentioned your gut kind of tells you think we resolve higher. Do you think this holds and maybe sets up for new highs here in the SPY?
That's what I would expect when I look at historically what we have been able to expect. And notice how it didn't matter what party won. 212, right. 216, 2020, the market just simply moved higher. Now, in each one of those scenarios, the market took a little dip the week or two before. Right. So it's not what we're doing right now seems healthy. It seems normal. And it's why I have a little bit of a trust issue with some of the breakdowns that we've seen. And so, I would think that ultimately we're going to do what we normally do. However, one of the things that has concerned me as of late has been the VIX over the past couple of months.
Sure.
Now, I'm a huge keep it simple kind of person. So I don't ever claim to be a VIX expert. Okay. But if you look over the past couple of months, as the S&P has continued to hit these new highs, look at how the VIX is putting in these higher floors as it goes up, as the S&P goes up. As I tell my members, like, look, this could mean nothing, but I think back to, for example, 2007, the S&P kept hitting these new highs. The VIX, you might remember the big Bear Stearns implosions were March 2007, right? And then we had the 10 or 12% correction in the middle of the summer, and we went on to one more high. Well, the VIX kept putting in a higher floor each time, kind of telling us the market is getting more and more worried. And we know how that worked out. The one thing that sticks in the back of my mind is how the VIX keeps doing that. And here recently, we just hit these new highs. VIX took another floor step up. That being said, if you're just using 2007 as an example, that runway was about 8-9 months long. So doesn't mean anything's imminent, but I do get a little bit curious about what happens after this great time of year.
Okay. As far as the VIX goes, this is also something that we kind of focus on pretty much every day. And are there any specific levels that you pay attention to? Like one of the levels we were discussing yesterday with the group is 20. And generally speaking, if the VIX is above 20, maybe there might be some more kind of volatility ahead. And when it drops below 20, traders are not as worried. Do you have any specific VIX levels that you follow or that you look out for on a regular basis?
Absolutely. Specifically when it comes correction time. Once we know we're knee deep in it, right? If you look at historically across the VIX and you just draw a line basically across 50, right? You're going to see obviously the 87, you're going to see the 2008, and you're going to see the COVID. But notice how there are like 12 or 13 other corrections that the VIX stalled right around 50. Right. And so that's one of the main things I look at. If we start getting into that type of sell-off mode where we now start seeing a 20 and a 30 VIX, I always warm my students and members up to think, okay, when we get close to 50, start paying attention a little bit. And if you're aggressive, if you're the kind of guy that likes it exciting, feel free to take a shot there, but start looking for potential VIX reversal around there or shortly after. Because even if you go back to that 1987 or that 2008 or 2020, when we shot clear up into the 80s and 90 on the VIX, that was the end, right? That was, that last spike. So I watch those higher areas specifically once we get out of the area of just a nice healthy pullback and we've moved more into correction mode.
Okay. Now, are you just trading some of these moves? Do you have kind of longer term positions that you either adjust or do maintenance on when you see just really kind of big changes in the market as signaled by the VIX?
I wouldn't go, yes. I would go with yes in those moments where the VIX has told us something. So there's also another nice little market buy on the VIX when you combine it with a Bollinger Band. So there are these moments in time where yes. But if we're talking about day-to-day, week-to-week, the flagship service that I operate, which is the one we're doing the open house for next week, we do keep it current week. So we're very flexible. We kind of do a lot of hedging and strangling throughout the week. I refer to it as kind of like playing a chess match against the market, right? So today we think this, if the market makes a move, then we'll adjust here. But then there are other services that one that I operate that is longer. So for example, we do have calls on the SPY going out to the end of the year because this is the time where we would expect from here on, if historically we do what we've normally done, and no matter what's happened the last week or two, pan out a little bit, this is still a nice big bull, we would expect to be moving higher. So for that, yes. And then if we have to adjust, if I have to hedge, then we'll make some decisions. But we do like to try to keep it as simple as possible. So right now, good old-fashioned calls, expecting to run to 6K, probably higher by the end of the year.
Okay, real good stuff there. The other thing that I wanted to ask here, I have to, just because it's election week, are there any individual names that you're kind of looking at if one side wins or another, or maybe if it doesn't matter who wins? Are there any plays that you're kind of looking for post-election?
Absolutely. So to answer the question, not really as far as specifics. Now, I do know, because I like to, hey, maybe this isn't my cup of tea, but for you, there's this. So for example, I have members that like longer term plays. Hey, this looks like a good investment. It might not be for me, but here, this is for you. So election time, I know, for example, one of the biggest if not the biggest sector rotation that I've ever seen on an election was when Donald Trump won in 2016. Okay, because I think the general consensus going in was that Clinton had this. Yep. And then when that didn't end up being the case, I have never seen a rotation like we saw that next morning into financials and industrials and these banks the next day. So,
were you watching the overnights? Because Forex was making moves that it normally takes months for Forex to move. Futures were crazy. I remember that night. I was thinking to myself, oh yeah, I might trade this a little bit here. We'll see how this goes. And then everything started going haywire. I was like, yeah, I might want to wait. I might want to wait till the next day. And like you were saying, the rotation was crazy. So
yeah, I'll never forget that. I'll never forget where I was because I was bowling that night. I was in a bowling league. We bowled on Tuesdays, and I was watching the futures, and they kind of started in the green, but then once votes started coming in and Florida went a certain direction, the market, a lot of people don't know, the market was down around 5% or so overnight, and a lot of it had worked its way back by the morning. But yeah, it was wild that as things were flying around. But that sector rotation, I do think those that are looking for longer term exposure, I think it matters to them. For us, mostly my wheelhouse is in that shorter time frame. Mm-hmm. So I'm a huge, when I teach and, even the trading, and as a lot of times you're narrating as you do the trades, where I'm not concerned with the why. All that matters to me is that it is. So if stock X breaks above this level, like Apple's got a pretty good 52-week high now that is tested twice. If Apple takes that thing out, hey, look, it doesn't matter to me why. If you want to say it's because so-and-so won or so-and-so, right? Look at that, right across the top.
Yep. Right there, it stands out.
Yep. So I'm a huge fan of, and I don't mean this in absolutes, but the market doesn't care what you think. It certainly doesn't care how you feel. So just trade what you see. So if the market sends Apple above that breakout point, it doesn't necessarily matter to me. If you want to say it's because Trump won or because Harris won, cool, I'm here to make money, and the market's telling me Apple appears to be going higher, right? So that's typically how I handle it.
Yeah. Okay. That's real good. One of the things that I was saying earlier before you came on here is that Apple, as far as some of these bigger mega cap tech names, Apple actually kind of feels like the safety trade. So you just kind of on the back of the election and the uncertainty and all of that, Apple almost seems like one of the safer names to be in as opposed to something like NVIDIA. Or something of that nature. One more question regarding the election. We've talked and how it applies to the market. We've talked a lot about how the market really likes certainty and it really doesn't like uncertainty. And I'm not necessarily concerned with which person wins or not. I think the market is going to survive. But are you at all worried about maybe not having results and the uncertainty being carried out through the rest of this week or maybe even into next week? Is that something that you're kind of planning for at all?
Not really, because I actually went and looked back because we've seen this show before, right? 4 years ago, we saw that kind of, after, kind of lingering for a few days, all the market did was go higher every day. Now, I'm also a huge, didn't like skyrocket, but it just kind of kept moving higher. But I'm also a huge proponent of the market knows more than any of us ever will, right? The market is my nude feed. So I always, I always say, hey, look, the market's never wrong, right? If the market goes higher, you can argue with it all you want. So I look at situations like that and say, look, I don't know that if I can explain why the market's moving higher with this uncertainty that we have right here. All I know is that the market is, and the market is telling us X. So same thing when I look at yield, same thing, 0% surprised that yields have been rising because the market has been saying it, right? If you looked at it and turned off the commentary. So I'm not too terribly worried about it. I do know that I probably would be more worried about the volatility that might surround Thursday with the FOMC than I might the election.
Okay, interesting. Really interesting take there. Okay. Any stocks you really like, you want to kind of close us out here with, or anything that you saw recently that you think is pretty interesting?
Yeah, absolutely. So let's say that we do get the upside resolution, and we do need to be fair, right? I could look back at 2020, 2016, 2012, all I want. The market could decide this time, these warning signs I gave you last week, they meant something and we're going to decline. But let's say we just do what we've normally done and we move higher. Apple right here was one that we have on our radar that we're watching. We're watching again. If somebody just drew a line right across the top, we're watching that haircut. We're keeping an eye on Meta. If you look at Meta, pretty nice little short-term haircut it took at 600. We like these clean, important levels, these ones that the market has said multiple times, hey, this is a problem, this is a problem. We take these marks out, then for us, that's a relatively reliable sign of moving higher. We are watching some of the Chinese names that are kind of moving here pre-market. Futu was one that we really liked if it could regain 100. And this morning, it looks like that it might actually do that. But we'll see. It couldn't hold 100 yesterday. So there's a lot of these ones we're watching to see. And we tend to do a lot of the trading, for example, in our prime time service. We like to do a lot of our work in that 3:30 to 4, which is why we call it prime time. So, for example, we'll be watching Futu at the end of the day. If it looks like it's going to hold 100, we might look to go long there. But two of the bigger names that we're watching there that are on a lot of people's radar, Apple, that Meta in the 600, and then Tesla last week, right, shot up. And before it ever got there, we said, you better watch 270. You better watch 270. Look past a couple of years. It's pretty easy to see. You better watch 270. What'd the stock do? Hit 270, turn right back down. If we get a turnaround, I think everybody should be considering maybe some long exposure to Tesla if that thing takes out 270.
Okay, real good stuff. And actually, right before you got on here, I was also saying, hey, you better take a look at 270. That seems to be a pretty important level. Okay, awesome. Thank you very much for your time, Christian. Really appreciate it. Awesome job. T3 Tuesday. Good luck with the rest of the week. Good luck with the election. And I hope the polling place you go to just isn't too crowded for you.
Thanks, Ryan. Appreciate it. Have a great one.